Mr. Bagga, welcome to the show. Wanted to understand, since we understand there are strong global cues, but Indian indices were on its own downward spiral. Majorly, FI selling was one reason, but what is a bigger reason? Is this pre-election jitters that is creating nervousness, or is it the India's expensive valuation over peers in emerging market the bigger reason?
No, I think it's the election jitters, and you can't help it. It's going to go on for the next 3 weeks. June 1st, Sunday night is when we get the first exit polls, but that will not give any kind of substantive relief to markets. Only June 4th afternoon, when you get the major trends through, is when investors will finally settle down. There is no way anybody who's seeing 98 crores electorate, about 60 crores of them are going to vote, is going to get this right on a very consistent basis. In fact, only three rounds of the polling have yet gone through, and you're seeing the impact on the market. So a lot of fake news, a lot of fake media, a lot of assertions from both sides, a lot of negative campaigning, and a very extended 6 weeks election season, which has really, left a lot in terms of people's imagination. But I have seen this every time. In fact, I remember in 2009, there was a big chance that one of the regional party supremo, she would become the prime minister. And I had to present a paper on that to our headquarters in Frankfurt at that time and analyze what it could do to the firm that I worked in India at that time. Election season brings its share of uncertainty. What one would have wished for was that we get a 15-day elections and are done over with instead of this 6 weeks, which is really killing the markets. We were at all-time highs. We have come down from there. So it is natural profit booking to some extent. FI selling, I think most of it is due to just cutting off some positions. It's not reallocation out of India. In fact, we had the Citi report today, which was more favoring India over China. China is still a story unfolding. We don't know how the property crisis end game will be. We don't know the overcapacity in China. Xi Jinping had a very dismal tour of Europe where nothing practically got done except shaking hands with small European countries. But otherwise, the substantive issues could not get addressed. So with respect to that, India is a shining story. Now, how well that translates on June 4th, I think that's the big question. So I would put down all this VIX, all the volatility, 67% increase in India VIX in the last 12 days. All this is election related, and there is no easy way out. We will have to bear the pain for the next 3 weeks also. So even if we clamber up the stairs, we come shooting down the banisters or shooting down the lift. That's the trouble. So today you clawed back a little, and then when the selling comes, boom, it's double or triple of that the selling happens. We are near a good support levels. Hopefully we don't go down much more than this. But even if we do, I think June 4th onwards, things will look much better. Right from 99 to 2019, if you see, within a year, you have much better markets. And leave aside the COVID, March 2020. But if you see just before COVID, the markets did well, even for 19.
Absolutely, Mr. Bagga. Thank you so much for such a detailed explanation. That puts a lot about the market moves in perspective. But Rajesh, I'm going to come back to you. We fixed that audio glitch. Tell us about the levels that you're spotting and continue with your answer, please.
So in current week, Nifty is now slipped below to 50-day moving average, and now Nifty is trading almost near to its 100-day moving average. So it's very critical for the Nifty to hold out about 22,000 level. If it slips below to 22,000 level, then this sell-off can continue further, and possible down move can extend to 21,800, even 1750 also. We have seen major call writers are now aggressive at 22,100, 200 strikes. So these levels on the higher side are likely to act as a major supply zone for any kind of minor pullback if we witness in coming trading session. So major supply zone is now placed at 22,200. If we able to take out these level, then only some comfort buying or some short covering action we can see in the market. But looking at the broader market, the way most of the sectors have witnessed the profit taking as well as the short selling, that clearly giving us some signal that some cautious approach is taken by the most of the market participant ahead of this general election. The elevated VIX is also indicating that yes, there could be some more volatility and bearishness is likely to be there in the coming trading session. Even on the bank nifty, the major dent was there in the banking as well as in the financial stocks. Bank nifty almost down by around 3% in the current week, and now bank nifty is also trading below to 50-day moving average. The way bank nifty has broke its important support area of 48,000 on a weekly closing basis, that clearly give us sign that if we continues to trade below 48,000 level, then possible supply pressure can extend, and then bank nifty can also go down towards 47,000, 46,800 also. So I think one needs to be little cautious at this juncture until the 22,200 not taken out on the higher side, or on the bank nifty 48,000 are not breached on the higher side. Until these levels are not taken out, I think one should remain on the cautious side. Some more bearishness is likely to be there in the market for coming week.
Okay, some more words of cautiousness coming in from Rajesh, and of course, Mr. Bagga was sounding also cautious at this point in time. In fact, he expects 3 more weeks of weakness or consolidation in the markets. We'll stay for a short break here. Both of our guests are with us. Don't go anywhere. Welcome back. You're watching Your Trades. Rajesh and Ajay Bagga are here with us. Rajesh, since we've closed above 22K, any hopes of, I heard you, you said that there's still a cautiousness, but then any hopes of a minor pullback coming week? What are the levels that give us like the tough resistance? And in fact, the spaces which have fallen the most, will they be the first to recover also? Like PSU Bank or energy stocks? And what would be your recommendations for this week? Coming.
So Priyanka, I think the sector where we are seeing outperformance, they may continue further more upside as the market was volatile, but the sector like automobile, metal, even capital goods, these sectors were showing some amount of buying interest, and some of the stocks were showing very good buying interest throughout the week also, despite of market was volatile. Though 22,000 is, yes, as we spoke, like, yes, it's a very important and critical support area for the Nifty. Nifty is already in oversold trajectory for near-term trend. Some pullback could be there, but again, the stiff resistance is placed at 22,200, 250 zone. That needs to be, watch closely. Until these levels are not taken out, then I think the pullback will again, meet to the supply pressure on the higher side. So those who wants to trade for very smaller pullback, they can take some buying position around 22,000 level with very strict stop loss of 21,950. That needs to keep as a stop loss. To play this up move, some of the pockets where we are focusing at this moment, Zomato is looking very promising. The way stock managed to give breakout of last 3-4 week consolidation, and now again the stock is now holding about 200 mark. So I think one can look to buy Zomato at this juncture. Zomato is looking promising, and we believe that this rally can extend for Zomato, and possible upside target for Zomato could be there around 215 to 220 kind of zone. So one can buy this stock with stop loss of 196. As we mentioned that we are holding bullish view on some of the metal space, and most of the metal stocks like Hindustan Zinc, Hindustan Copper, Vedanta, these all stocks have done well in today's session also. So Vedanta is our preferred choice at this moment. The way stock is holding the ground at higher level, and again the kind of the addition on the open interest is witnessed in today's session. We believe that Vedanta can exhibit good amount of rally in coming week. 425, 430 is the possible target. Vedanta is buy with stop loss of 402. And from automobile space, Aishan Motor is looking promising. Stock managed to give breakout of last 5-6 days consolidation range breakout, and the most of the automobile stocks are showing good traction. We believe that Aishan Motor can continue furthermore upside. 4750 is the immediate target where we are projecting. Keep your stop loss at around 4600.
Thanks so much for sharing your view as well as your stock-specific ideas with our viewers. But Mr. Bagga, I'm going to come back to you. We're running a little short on time on the show, but I really want to get your outlook on the entire FMCG space. For the first time now in a very long time, we've seen rural demand is recovering. We've seen some improvement there. Even for the likes of Dabur, rural has overtaken the urban demand. So what are you penciling in when it comes to the entire FMCG space? It's done pretty well over the last 1 week. What's your view ahead for these stocks?
No, it's coming back, but we don't know, is it a function of defensiveness or is it really a re-rating of the sector? I think if it's a re-rating, it's ahead of the curve. We have to have a good monsoon and then see around October once this season's crop comes through after a good monsoon. Then we'll get an idea. So I think it's more defensiveness rather than any re-rating that has yet taken place. Valuations are not at all cheap. Good thing is under-owned. It's an under-owned sector. So I would say domestic cyclicals, your autos, your infra, capital goods, and financials, they are a much better bet than FMCG. But we'll wait and see. I think a lot of it will depend on monsoon. And you could just see people selling off FMCG post June 4th and coming back into defense, railways, auto and capital goods.
Bagga, thanks so much for that take coming in. On that note, Rajesh as well as Mr. Bagga, I'm going to have to thank you on the show. Thanks so much for taking the time out and speaking with us.
If you like this video, then like, share and subscribe to ET Now.